So, with regard to the event today, today's agenda and the objectives, what we know and what we've actually seen is that the global trade landscape is changing and shifting quite significantly. It's not as smooth as it's always been. We're seeing increased protectionism, we're seeing regional conflicts, we're seeing regulatory fragmentation. So understanding these trade tariffs is more important than it's ever been before. So today's webinar is designed to break down those complexities and also give you the practical real world strategies to understand one, how trade tariffs work, also understanding how you can mitigate the international trade risks, and also how you can leverage some of those trade agreements, such as AFTA, AGOA, and some of the EU arrangements, to also enable you to gain a competitive edge. To enable us to achieve this, you'll hear from our two outstanding speakers. First and foremost, we've got Bolaji Sofoluwe MBE, who is the Managing Director at ETK Group. And we've also got Fergus McReynolds, who is Director of EU and International Affairs at the Chartered Institute of Export and International Trade. So without further ado, I guess let's dive into today's session. And I hope you can all join me in welcoming Bolaji and Fergus to this session today. Brilliant. So, session number one that we have today, it's the role of trade tariffs in global trade. So I think I'm going to just open this just go straight to the point in terms of what should people know. And I'm going to pose this question to Bolaji first in terms of in what ways are recent geopolitical tensions impacting global trade structures in terms of taking them away from what was historically known or how we operated in what we could probably say the old world?
Well, thank you so much, Tessa, for organizing this webinar for our clients, friends, and partners around the world. We were just joking, Fergus and I, weren't we, about the fact that it was very quiet for a very long period of time. And then all of a sudden, we've had this flurry of activities in the trade space. Specifically, I think, just from the geopolitical tensions to start with, and then we've had a number of logistical failures, starting from the Suez Canal to what's happened in the Red Sea more recently, and the troubles and disruptions that has caused to freight. And now we are in a trade war, apparently, where we are seeing some very interesting policies from the US, and there's quite a lot of reciprocal tariffs that are being put in place as well by other countries. So we are in very unfamiliar territory, if you like, especially for those who've just joined the trade scene in the last few years. I think for us in the UK, it started from Brexit, to be honest. That was quite a disruption, and it did cause quite a few quite significant difficulties, particularly for small businesses that didn't have the resources to plan or to adjust to the very sudden changes that occurred as soon as Brexit happened. We also had a situation where the UK was then coming out of Brexit, starting to develop and form brand new trade agreements or economic partnership agreements around the world, especially with countries that were already aligned with the EU, and so had those existing partnerships and trade agreements in place. So weren't quite sure how to navigate that as well. And now you've seen a situation where everyone's grappling to remain in a favorable position with trade with the US as well. So it's been quite a journey. The geopolitical shifts that have been caused by the war in Ukraine, as well as the unrest in the Middle East as well, have all contributed to this perfect storm, if you like, of trade disruptions. And it has been actually quite troubling for a lot of businesses of any size, really.
Thank you for sharing that, Bolaji. I guess I'm going to lead on from that with you, Fergus. In terms of the work that you're seeing or doing at the Institute, is there any on the ground practical advice that you can give to businesses who are experiencing some kind of difficulty or tensions in terms of trading, whether it's their products or services?
Yeah, absolutely. And a big thank you to colleagues from ETK for inviting me and the Chartered Institute of Export and International Trade to join you today. I mean, everything that we are about at the Chartered Institute is empowering international trade, and we do that through education, training, and advice. We're active in many countries around the world, and we have, although this year is our 90th anniversary, so we're celebrating the setting up of the Chartered Institute in the UK 90 years ago, but we have offices here in Brussels where I'm dining in from today, and we established an office in Africa in 2022 as well. I think that what the response to this, I think, is really interesting. I think it's Bolaji said in terms of where we have come from and where we are heading to. And I think that there has been a real paradigm shift in terms of international trade in the last a decade or so. You started to see that international growth was decoupling from international trade, and you were starting to see 4 decades essentially of trade liberalization, of growth in international trade, and the benefits that presented, and that countries were minded that the economic growth strategy for both the receiving and the sending country was such that removing those barriers to trade should be the economically sensible approach. And that orthodoxy dominated for the last 40 years. And we saw removal of trade barriers, almost the elimination, particularly in the area of industrial goods, of tariffs between most significant trading partners. And what we've really seen in the last decade is a decoupling of those two agendas. You could call it a reaction to globalization, but I think it's a slightly more complicated than that. And we have started to see growing protectionism, nationalism in terms of international trade, a sense that we have ended up in a position where, because of the extreme growth of digital technologies and digital platforms being used to be able to create a market virtually for goods to be sent from anywhere in the world to any other part of the world, that perhaps there's a sense from countries that this system has got ahead of itself. And I think that you're starting to see a response to that you're changing the orthodoxy in terms of your supply chain management. And we are moving from a period of the best in class being the just-in-time model, how you can reduce as much friction from your overall supply chain running very thin in terms of your overheads and supply chains, to an increasingly just-in-case model. And I think that we are doing that because there are increasing geopolitical challenges, but there are increasing geoclimate challenges as well. Some of the issues that we've seen in terms of some of our major shipping channels in the Panama Canal as well, you're starting to see actually the impacts of climate change impacting on international trade as well. So I think that you are starting to see things differently. What does that mean practically for companies? I think really it's more important now than ever to be understanding your own supply and value chain. And the distinction I make there between those two is looking at your supply in terms of the suppliers and how far back you need to go down that to find your vulnerabilities and understand, are there pinch points in that supply chain, not just your suppliers, but your suppliers' suppliers and there beyond, which is going to be a concern into the future. And then your value chain in terms of what your customers are going to do in terms of reacting to that. And you started to see people holding greater inventory to ensure that they are mitigating against some of those disruptions. You see, increasingly more disruptions in shipping from terrorist attacks in the Red Sea through to just an upset of the overall trading system from COVID and the knock-on impacts in global shipping that we're seeing from that. And where you would have in the past been in a position where you plan for some volatility in the future, but the system is stable, I think the opposite is at the moment true, that actually volatility is the norm and you take advantage of periods of stability. So I think that we are really seeing that shift. Supply chain management and supply chain intelligence really important. knowing that information, the flow of information. I think some of the services that we as organizations provide to people in terms of understanding what's happening in the world of trade in different parts of the world is more important than it was before. So, knowing what is happening, not just from a regulatory perspective, but from a geopolitical perspective in different regions where you might have critical supplies for your supply chain. So I think there's more information. The great advantage I think that we're in at the moment is that we are in an emerging digital world where actually digital first solutions can help people manage that in a way that decades ago we wouldn't have even been able to dream of. But I think it is about the flow of information, understanding your supply chain as one of the first and initial responses.
Brilliant.
Tessa, if you don't mind, honestly, thank you very much, Fergus, for that. But just as you were saying that, something came to mind. So I'm just gonna sort of, one of the things that I think, most particularly SMEs, or let's even go to MSMEs, need to start thinking about is how to manage their profitability ratios on a much more frequent basis. A lot of companies have had the luxury of looking at profitability ratios at the end of the year. What's my gross profit margin? What's my net profit margin, and that sort of questioning. However, now I think we need to do it with a little bit more frequency. We need to do asset tests more frequently, just so that we know exactly where the position of the business is. And you just talking about that macroeconomic knowledge, it's so important. Now it's time to whip out the old frameworks like Pestle and sit down and do them on a regular basis and see where you stand in the grand scheme of things. And I think from a pragmatic point of view, it's extremely important for SMEs.
Thank you for sharing that. I guess during that conversation, we've heard about understanding your supply chain, changing supply chain models, and also managing profitability ratios. So with this in mind, what would you say are some of the unique risks that smaller businesses face in this kind of volatile environment compared to, say, a larger multinational?
Yeah, I think your challenges for SMEs, I mean, to some extent, it doesn't matter the size of your business in terms of the overall disruptions from geopolitical events, geoclimate events. We're all impacted by those. But what tends to be much more of a acute concern for smaller businesses is their access to information, their access, they're resource poorer, I should say, and they are time poorer as organizations in comparison to larger organizations. The impacts are relatively similar. I think it's also understanding where you can find the right information. And I think, working with the right organizations that can help you and guide you into being able to do that. There is support out there for you as SMEs to help you navigate some of that complexity. And in our partnership, that's one of the things that the Chartered Institute ETK are really keen on doing, and is looking at how we can use the sort of services and resources that we have collectively to help SMEs through that journey. But I think it really is that it is some of, unfortunately, the basics of international trade. On top of understanding your supply chain, I think really acutely right now, understanding tariffs, understanding the valuation of your products, and not just, unfortunately, how you would value them, but how they are valued by the customs authorities of the countries you're trading with. And that isn't always the same thing. And I think it's important for you to look at that, knowing the markets that you're looking at trading with. I think also your rules of origin and understanding that goes back to your supply chain and understanding your supply chain in depth. There are free trade agreements out there which will help people provide additional preferential entry into markets. But I think what Trump did at the beginning of April has completely changed things in terms of particularly industrial goods, and the blanket 10% tariff on goods into the US. For many companies, that will be existential. That will mean that market is unattainable, particularly in fast-moving consumer goods, where essentially that 10% can be your margin in international trade, and potentially your margin and then some. So understanding that tariff, understanding what your product is classified as, and how the country you're trading with classifies it. What is the valuation, the true valuation? I'm never going to say to anyone that a 1% tariff is immaterial, but the valuation of your product at 1% versus the valuation of your product at 10%, it's significant. So making sure that you've got that right. So there are some of the basics of international trade which are really important. I think we're also going to start realistically needing to understand more about sanctions and sanctions regimes, and that's a factor of the geopolitical disruption. The Russian invasion of Ukraine has created a huge complexity of sanction programs and overlapping sanction programs, but they are also increasingly being used by countries as mechanisms and tools in trade defense. And you see that with the US in terms of sanctions that they will take against companies trading with China. So, and vice versa, there are lists which are published by China and US in terms of companies that you can and can't trade with. So sanctions regimes and being aware of that. And then export controls is another area. So I think you've got a bucket of things that, in terms of what you should be looking at, there are places to find that. And I think the acute challenge for SMEs really is about that knowledge challenge, that resource challenge, and that time challenge. But what I would say is that there are organizations out here who are ready and really want to help people do that. We as the Chartered Institute fundamentally believe that international trade is good. It's good for the sending country, it's good for the receiving country, it's good for people and communities as well. And being able to help people do that, businesses that trade are more resilient, they're more profitable, and that's key.
Thank you for sharing that, Fergus. I mean, as you noted, information is key, and you touched on sanctions. I guess I'm going to pose this question to Bolaji in terms of what should companies be watching over in the next, say, 12 to 18 months in terms of some of the geopolitical hotspots that could reshape even further global trade?
Well, I'm really glad that Fergus mentioned sanctions, because actually one of the biggest things that people overlook is non-tariff barriers. And the fact that the tightening and the squeezing of non-tariff barriers has been systematically, increasing over the last few years. It's not just a recent thing, particularly for countries like the US. So navigating that is a considerable issue. We talked about nationalism earlier. So local content laws are becoming more and more stringent, which is a significant non-tariff barrier. And you have things like data protection, and how data is managed or protected in various markets, such as the EU and the US, and sort of making sure that your company can align with some of the responsibilities and demands of that market. Particularly China has struggled quite a lot with this in the US more recently. We all know what happened with the TikTok saga and everything else. As you can probably tell, this is not the struggle that started today. So it's really important that you take a look out for that as well. Different countries have different ways of describing what can be categorized or what counts as content as well. So for instance, US content, if it's up to 20% US content in a product or service, it could, you could be your product or service could actually be subject to less aggressive tariff measures. But again, it's what that US content really is and how transparent some of those rules are that you would need to be investigating as a business. But there's also things like the bureaucratic customs procedures, and particularly this is an issue that we've raised quite a bit in Africa for the AFCFTA, where whilst there are regimes in place now because of the free trade area, that are more or less tariff-free, you still have issues around the customs procedures and the fact that that information isn't quite trickling down to certain borders. And so it's actually there's actually quite a few barriers for that product or service entering the market, in spite of the policy being favorable. So there are things like that you need to really look out for as well. And this is particularly huge for service-based businesses because they're classed as what we call invisible exports. A lot of people don't realize that there's certain compliance, that they have to look at the compliance around the product or the service that they're offering to a specific market, even if that service does seem like it falls outside of compliance, the compliance regimes that products fall under. So you just have to be conscious of things like that as well, and make sure that whatever you're doing is aligning with that target market regulatory policies as well. But I think, it's not all bad, because obviously there are maneuvers that you can potentially explore, like the UK's free trade agreements that we've signed, over the last few years, where there may be some countries that you can produce in that do not have as the punitive tariffs that, for instance, a country like China has. And you look at how you can reorganize your supply chain to make sure that there is some content there. And, I was saying the other day, the other thing you can think about is things like what we've got in place here in the UK to facilitate trade, like the inward processing relief, for instance, where you can bring your products and services in. If it's for re-export, there is a level of coupling and transformation that you could do locally and then re-export it to a new market without having to suffer double tariffs and that sort of thing. So there is a lot of thinking and moving around that you could do to manipulate what's going on. I think what the real issue for SMEs particularly is the volatility of, the nature of the volatility of these policies. So do you make long-term decisions on what sometimes might be a short-term strategy by the US government to bring people to the table to negotiate? So those are the kinds of questions I'm hearing on a daily basis from our businesses.
Brilliant. Thank you for that, Bolaji. At the beginning, you touched on non-tariff barriers, which is something that I think is often associated with emerging markets. So I think with that in mind, how can emerging markets respond to this volatility? Do you think there's new opportunities as supply chains shift?
Fergus, yeah.
Yeah, I mean, look, I think there are, and look, you can, in terms of your supply chain resilience, and I think that supply chain resilience is certainly a growing importance for people, and as I said, that just in case type model in terms of managing your supply chain appears to be becoming much more of the norm than just in time. And you can get essentially to two extremes in terms of the ultimate response to your supply chains. At one end, you isolate the supply of the key materials, key inputs for yourself, and you essentially create a single a feed for that, and you take as much control over that single feed as you possibly can to ensure your continued stability. The other is diversification, and I think that actually in a world where we're increasingly seeing that volatility, diversification is what people are choosing more of than essentially isolating the supply of critical inputs. So in that world, absolutely, there are increasing opportunities because people are looking for different places to find the right set of products, inputs, skills, and that creates the ability for opportunities to grow in international trade and looking for new markets. So I absolutely think that that's one of the responses to this is going to be much more of a trade diversification practices. And I think that is important because that does bring additional challenges. And Bolaji, you're absolutely right. I think the challenges around non-tariff barriers. I think if you're talking about necessarily about food or medical devices, they have their own set of complications. But I think in terms of manufactured goods, we were in a world, and brackets before the beginning of April and what President Trump did, that you had relatively low tariffs on industrial goods, and actually the barriers to trade were the non-tariff barriers. They were the regulatory concerns, very fast-changing regulatory environments, confusing regulatory environments, and here I sit in Brussels, And to some extent, there's a huge program in Brussels about trading with parts of the world, the Global Gateway Initiative, to try and work proactively with partners and some developing partners around the world. On the one hand, which is a proactive initiative, but on the other hand, the introduction of a huge complexity in supply chain legislation over the course of the last 18 months, 2 years, with the carbon border adjustment mechanism, so accounting for carbon in supply chains, forced labor, deforestation, due diligence in supply chains. So on the one hand, there's an initiative through the Global Gateway of reaching out to trading partners and understanding how we can create opportunities for each other. But on the opposite hand, there's also a great complexity being added, particularly for SMEs in trading into the European Union as a trading bloc. So I think that we do have to have those conversations at a state-to-state level to understand how we can avoid having those two things pulling and pushing against each other, and actually creating eliminating those barriers to trade so that you can allow for that diversification, you can allow for that trade to flow. And I think that that's really important.
That's
Fantastic.
superb. Yeah.
Yeah. I guess leading on from that, Bolaji, are there specific sectors that you believe emerging markets or companies can fill in those gaps that have been left by the recent disruption that we are seeing?
That's a great question. I think we need to start from the governments of these emerging markets positioning themselves strategically. From my perspective, I think, if they create an enabling environment for things like industrialization, and that would be like providing the right infrastructure, the right regulatory environment, etc., they could potentially really reap the benefits of these global shifts that are occurring right now. I think about a country like Morocco, for instance, and just the strategic positioning of Morocco, the fact that it's so close to the continent of Europe. I mean, at night in Spain, if you put your lights on, you can probably see. If the Moroccan lights are on, you can probably see Morocco from Spain. That's how close it is to the continent. And they've invested in ports infrastructure more recently. They have renewable energy projects. They've put in offset agreements, and all of these things just to attract foreign direct investment. And I think Morocco is strategically positioned as one of the markets that we operate in as well, is strategically positioned to welcome new investors who will not just catalyze the industrialization in that country, but also improve the lives of several people in the country as well. Obviously, it's a very well-educated population as well. And if you, I'm sure many of our listeners would have gone to Marrakesh or Casablanca on holidays and that sort of thing, and would realize and recognize that it is quite a safe and good environment to do business in. So again, this is how I expect to see emerging markets sort of positioning themselves to leap on the opportunities that might come from this global shift that is occurring. And I don't necessarily think there needs to be winners and losers in this scenario. I think maybe just a reorganization of the global supply chain, and a reorganization, maybe a tilting of the balance from the Far East into some of these, some of the global South markets, I think, is what we expect to see. And you're even finding countries like China becoming a little bit more aggressive in investing in markets in the global South, because they recognize that this global shift is going to happen. So again, it's really, I think, that don't necessarily need to be winners or losers, but just a reorganization, I think.
Fantastic. I think we've nicely just transitioned into our second session, which is about the trade agreements and policy insights. So leading on from your answer there, Bolaji, you mentioned keeping the government accountable. With regards to governments, we've seen the implementation of AFTA, and also AGOA is up for renewal later this year. How do you think these shifts are shaping the implementation or probably the effectiveness of trade agreements like AFTA or AGOA?
Mm. Well, I think in more recent times, a country, one of the largest economies in Africa, Nigeria, published a gazette of goods that they are now making zero, creating zero tariffs on. It's 90% of goods, and as with any nation, when you're creating those kinds of tariff policies, there will be some sensitivity to products that affect, food security. A country like Nigeria obviously has a huge dependence on oil and oil products. So obviously there would be that 10% that's left is really just some level of protectionism. But again, it just shows the willingness of countries like Nigeria to fully utilize what would become or what has become with the ratification the world's largest trade bloc. Um, so again, I think the body language of the leaders and the ministers of finance and trade and industry across Africa is that we really need to get together. We need to co-create our future as opposed to acting as individual states, nation states, where, the risk profile of which is a little bit more complex. If we come together, then we could create a very, very interesting opportunity. This is what I'm feeling from the body language of the leaders, but also it instantly becomes a much more attractive investment destination for anybody that's looking at it. And I think one of the key elements that's needed for these countries is infrastructure. So they need to come together and think about cross-border infrastructure. It can't be taking 52 days to ship something from Uganda to Nigeria, which, I mean, the first AFCFTA trade that occurred between Uganda and Nigeria, it did take about 52, I think it was 52 or 57 days for that product to reach Nigerian shores. That needs to change. There needs to be some kind of pan-African infrastructure that needs to go in place for African leaders and African countries and the people, most importantly, to benefit from the free trade area. So I really think governments need to wake up and take responsibility. I also think there needs to be a galvanization of local capital to be able to do this as well. I think relying on usually dollar-based foreign direct investment in things like infrastructure may not necessarily have a happy ending. Many people talked about the Belt and Road Initiative that China has embarked on, as we can see, mostly investing in infrastructure, ports and roads and that sort of thing across Africa. Whilst this is a good thing because Africa was looking for infrastructure funding and couldn't find it, you are seeing unfortunate situations where, for instance, in Zambia, one of the ports in South Africa had to be reclaimed. And I don't know whether that deal has been restructured yet, but you're seeing situations where it hasn't really worked out for African governments in the way that they probably would have wanted it to. So I think there needs to be a galvanization of local capital to invest in local infrastructure projects that go cross-border so that goods and services can move and people, most importantly, can move freely.
Thank you for that, Bolaji. So Fergus, we've touched on specific trade agreements such as AFTA and AGOA. From your perspective, what would you say are some of the potential consequences of the geopolitical fragmentation we're seeing? What are the consequences on future trade agreements and also the preferential treatment that we have seen in the past?
Yeah, I mean, just before I come on to that really important question, Bolaji's point there about the infrastructure is absolutely vital. I think, what's the best thing we can do with our FTA strategy in any country or in any region is actually look at the utilization and make sure that it's done. And part of that is education around the FTA itself. The last thing anyone needs is an FTA gathering dust because it was, a really importantly hard won negotiation, but actually utilization is poor because we just haven't got out to people and shown them the value of an FTA. So I think that's really important. But being able to do that is absolutely about the underlying infrastructure. We have looked at how important it is to help communities to have the right infrastructure, the right digital infrastructure, the right energy infrastructure, the right transport infrastructure in place to be able to even have the potential to benefit from the advantages that an FTA have, and then having the knowledge of what the FTA actually does and what it doesn't do. I think increasingly looking into the future, modern FTAs, really do need to look at some of the non-tariff barriers, and that you look at the world-class FTAs, and to some extent, the trade and cooperation agreement between the UK and the EU can be seen in many senses as a really progressive agreement. It has a huge amount of cooperation on regulation. The regulatory cooperation chapters in that are quite extensive. It's taken slightly different approaches around things like rules of origin. So I think what you're probably likely to see, which effectively recognise the international nature of supply chains, and I think that is really different. So I think what we're likely to see in terms of there's some commentators that have been speaking to over the course of the last month or so have sort of talked about the end of the big FTA. I'm not sure that that's entirely true, but I do think actually that there is more to be done and more to be achieved through larger blocks of nations working together. And I think that is important, not just at a block to block. I mean, if you think about how African nations work with European nations at a pan-African, pan-European level, I think is important. Bolaji made the point, we've got to make these trade blocks work internally for themselves, as well as looking for opportunities with other trading blocks. So I do think that while I'm not sure that the terminology would be necessarily the coalition of the willing that I would use, but I think that there are like-minded trading blocks around the world who are likely to get much closer over the course of the next decade, and that they have a mutual benefit in being able to do to support each other in doing that. But I think the fundamentals still remain. If you're going to negotiate a trade deal or an access agreement, let's make sure that people know about it and people know how to actually utilize that agreement. And let's get the infrastructure in place to be able to allow exporters and importers to benefit from that potential. And I think in that context, one of the things which I think is fascinating in terms of what's happening across the African continent is some of the initiatives in terms of digital first, and looking at opportunities where actually skipping a generation in terms of trade technology and going to digital solutions, looking at the potential of paperless trade. And I think that that's some of the really exciting developments in international trade over the next decade, and looking at how we create digital trade corridors, how we use new technology and emerging technologies to help improve that trade, and can that be part of that infrastructure solution? So I think absolutely, FTAs I don't think are gone, but I do think it's probably going to be more at a block-to-block level. And I think that vitally important is not just the blocks talking to each other, but the blocks into block trade discussions. Get the fundamentals right in terms of infrastructure, think digital first, and then make sure that people understand what an FTA actually does and how it does genuinely support trade between partners.
Fantastic. Thank you for that, Fergus. I particularly loved your comment about FTAs gathering dust. So do you believe trade agreements currently are keeping up pace with the geopolitical fragmentation that we're seeing, or are businesses somehow being left exposed?
I think, look, the world is moving so fast at the moment. I mean, I would probably have given you a different answer to this on the 26th of March than I'll give you on the 26th of April. And who knows where we'll be by Wednesday next week. But the world has moved so rapidly and so differently. And I think that the immediate concern for many at the moment is a 10% baseline tariff from the US as now, from what the Trump administration are suggesting, is in perpetuity. And that's a new normal, and an increasing trade war between two of the world's largest economies, which are going to have an inevitable impact on us. So I'm not saying that FTAs are going to play second fiddle to that, because they're still vitally important. But I think that the immediate concerns for people at the moment aren't necessarily about the intricate details of how an FTA can support them. But what I would say is, don't forget that they're there, and don't forget that they have the potential to help you. And I think it's incumbent on governments and organizations to help businesses understand why FTAs are really important, and why we spend so much time as nations and as organizations feeding into them and negotiating them, because they do genuinely have benefit for both parties.
Fantastic. So keeping on the theme of businesses, Bolaji, are the practical steps that businesses can take to hedge their risks when entering what would be perceived as, say, politically volatile regions?
That's a good question, because this is what we've been doing all our time at ETK, helping customers get into politically volatile regions where sometimes policies can change overnight, even though they might have a written constitution somewhere. And currency volatility, which we saw recently, can wipe out whatever profit that you were going to make on a long-term contract. And I think these kinds of issues are, things that, SMEs always need to have at the back of their minds. Like I said, using very old but very reliable frameworks like a pestle is something that they can do on a regular basis in-house, even if it's just bullet points, just bringing it down to the basics now, using bullet points to figure out whether or not this is a space that they want to approach at this point in time. Many people talking about specifically a market like the US right now is, should we put our entry plans on hold? I would say no. Again, just reminding people of how tariffs work. It is the importer that pays the tariff cost. And, one thing I always say is have an open conversation and communicate with your importer, with your buyer, and talk to them about whether or not this trade regime is going to completely eliminate whatever profits that you might have anticipated from this particular product, and see how you can work on both sides to continue to create value and maintain market share. And I think it's really important that those conversations are had openly and transparently. Go back and look at your Incoterms. Again, these are all things that a lot of SMEs will need to revisit. What kind of relationships do you have in place with your buyers, and what are the terms of those relationships? Again, as you might imagine, for instance, if it's CIF, insurance would have gone through the roof at the moment because of the current volatilities in the market. So take a second look at that and see how you can adjust those terms. Or potentially, if you're signing a new contract with them, look at how you can change those terms to reflect the current situation. I would say that most savvy business owners will be expecting a renegotiation. They'll be wanting you to open the lines of communication. So I think it's really important that businesses do this. I think, just having had quite a few conversations with clients and people in different situations recently, I always say that talk to people on the ground, who are, actively participating in that market space. So if you haven't entered already, because I've just previously been speaking about people who have identified buyers, have agreed terms and the rest of it. But if you haven't entered already, talk to the competition or those who are representing the competition on the ground in the market, find out what sort of pricing is on those products at the moment, how they're faring in the market, whether there's been a complete downturn in the uptake of those products or services. Have a conversation, reach out, do your market research all over again. Because as Fergus said, the markets are moving very, very quickly. There are a lot of changes that are occurring in real time. So you really have to keep your finger on the dial.
Brilliant, brilliant. So Fergus, moving from the practical steps that Bolaji has offered, what role do industry associations or support agencies such as yourself, the Chartered Institute of Export and International Trade, play in helping businesses stay compliant and also stay informed?
Yeah, absolutely. I think at the first and foremost, it's about making sure that we're sharing information. One of the things that we do as the Chartered Institute is we have our daily bulletin and our week in trade reports, which report on various things which are happening around the world in terms of key events in international trade. So I think that's important, just making sure that you're up to date with the various impacts. We offer a range of training and support, training and support and advisory services. We have, particularly around the US tariffs, for example, we have a bundle of courses looking at some of the things that I've talked about earlier today, looking at valuation, looking at classification, looking at tariffs and export controls, and making sure that you understand how that's going to impact you. We also provide an international trade surgery service where you can speak to one of our qualified trade specialist advisors who can give you specific advice. And I think one of the things that we all are conscious of in the world of international trade is that there are very few standard answers because countries are different, supply chains are different, and companies are different. And so much of what we look at in international trade is reliant on three different variants: the product itself, the country it's coming from, and the country it's going to. So it's difficult often to give very specific generic answers, if that's even a thing. But it's difficult to give general advice on things. So I think it's really important to look at, as Bolaji has said, to support those people who do know your sector, who do know the market you're looking at, who do know the experience of trading from out of the country that you're trading out of. So, organizations like ourselves and the sort of partnerships which we're looking to achieve are about helping businesses with that. The supply of information to know what's happening around the world, understanding the regulatory changes that are happening in your market, in the markets that you're looking to explore, understanding the basics of international trade and some of the more complex elements of international trade, and recognizing that everyone's journey is unique. Each individual product's journey is quite unique as well, and increasingly different. And I think that managing that volatility in totality is about preparing yourself for a lot of these things and getting ahead, perhaps, of some of the potential disruptions. But recognizing that, as I said, I think we are moving away from a world where volatility is the occasional and normal, and stability is normal, into a world where volatility is normal and taking advantage of periods of stability, because they'll be few and far between, unfortunately, and certainly in the next 18 months.
Fantastic. Thank you for that, Fergus. Bolaji, is there anything you would like to add to?
What can you possibly add to that? It's fantastic. Thank you so much, Fergus. I think, I would absolutely agree with everything that you said. Talk to the person closest to you that knows more than you in international trade. So that could be your chambers of commerce. It could be, even your banker, the person who handles your trade finance, for instance. They would have a finger on all of this. They have the big resources and the financial capacity to buy very expensive reports in real time. So, take advantage of those kinds of people. And just make sure you're up to date with all of the information that you require. But the other thing I will say is, talking about volatility being the new normal, just be nimble and flexible, because you will need to be for quite a long period of time. And where you find that might be more stability, bearing in mind that there are hundreds of countries in the world, and 80% of them are still trading according to World Trade Organization rules, which is something I heard from the head of the World Trade Organization. Find stability where it is, as well. If you're not a risk taker as a business owner, and you are struggling with the amount of uncertainty that's ahead of you, then just go somewhere where there is a level of stability, and there are still trade agreements in place that you can trade with. But again, like I said earlier, don't make long-term decisions based on what's happening in the short term, just because of how quick things are changing, and try your best to seek information where you can.
Fantastic, thank you. So prior to today's call and during the call, we've had a few questions which I'll just throw a couple of questions towards yourself from people who are registered to attend. So let me go with the first question here. Let me look. So one of the questions we had from a Kenneth was, what's one major geopolitical risk that is currently being underestimated by businesses?
Yeah, I mean, I'm not sure that it is definitely being underestimated, but I think that I think it's the secondary impact of what's happening between the US and China at the moment, and I think that one of the challenges that we're going to see is trade diversions. We've already seen that with incredible statistics around the diversion of ships between US and China, which are heading to other parts of the world. So I think that that's one thing that people should be cognizant of. And certainly, if you look at the European Union, the UK government, and governments around the world, they've increased significantly their market surveillance activities and looking at how potential disruptions like that will have an impact on different markets. So I think be cognizant of that. It's not often just the direct, but the indirect impacts of trade wars between big blocs. I think the other thing to look out for, which you probably sometimes might be underestimated, are the impacts on your suppliers and your customers. So just take the differentials that the original Trump tariffs would have created. I mean, if you're in a country that has a baseline of 10, but your customer or your supplier is in a country with a baseline of 30, for argument's sake, and they have taken retaliatory measures, you're going to start seeing really strange behaviors in those markets, and the impact that's going to have on you. So know your suppliers and know your customers, and know the challenges that they are facing, and don't underestimate the challenges that they will be facing. Work with your suppliers to overcome them, and be cognizant with your customers of knowing that they're facing a lot of challenges as well.
Fantastic. Bolaji, would you like to add to that?
I couldn't have said it any better in terms of that communication. Like I said earlier, is extremely key, and the transparency around that, and the difficulty that lots of people are facing and the decisions that they're having to make on a regular basis. I think, large and small companies are being affected by what's going on. Even individuals are being affected by what's going on. If you were like me and made the mistake of looking at your pension funds and your capsizes a couple of weeks ago, you might have had a heart attack, and then, but thankfully that's getting better by the day. But that's the reality. Even individuals are being affected, so purchasing power is going to be affected as well, and people may not. The consumer space may not be as buoyant as it has been in the past, and people just tend to, once they see any form of disruption or volatility, people tend to stockpile. So what you will find is that people will just start refraining from spending. And so this might actually start to cause some economic stresses in certain markets as well. So look out for that. Look out for what people are not seeing right now that might start to emerge going forward. And I think again, just taking to Fergus's point about the impact of, when the giants fight. I think is it in Kenya, or I can't remember where this proverb comes from, that when two elephants are fighting, it's the grass that suffers the most. Yeah. And you've got China and America, currently at odds. It's going to affect the rest of us whether we like it or not. And particularly in Africa, where a lot of the transactions, I mean, before, well, PAPS, which is the payment system that has been introduced across Africa, has come into play where local currencies can interact with one another. But actually, prior to this, you had to still make payments and interact with one country to the other in dollars. And so the volatility that will come from that currency will affect a lot of emerging markets, particularly across Africa as well. So again, the giants are fighting. So please take note of the fact that as grass, we need to probably stay out of the way so that we don't get trampled.
Love that one. I'm going to definitely use that one.
Yeah, it's a great saying. I think we have one more from Joel. It was, what should exporters be monitoring closely over the next 12 to 18 months?
Yeah, look, I think the same is true for exporters as well. I think it's being cognizant of the markets that you are in, and the changes which are happening in those markets. Make sure that you're in regular contact with your customers and understanding the challenges that they are facing. I think we are in such a fast-moving world at the moment in terms of international trade, making sure that you've got that regular line of communication and that you're ready to help. I think, well, as you mentioned it earlier, I think that actually you're going to see increasingly additional clauses in contracts, and I think that is going to be something which is going to be really interesting. I'd take heed of that as exporters and importers, but exporters as well, to make sure that you're getting the right legal advice in terms of clauses which you will start seeing coming into your contracts for supplying markets because of the challenges of the stability and instability. So I'd say that is one thing, making sure that you're talking to your customers. Make sure that the market that you're exporting to, that you're aware of some of the direct and indirect challenges that they're facing. And the other thing I would say is do look for the potential of other markets. And while complexity and disruption create challenges, where there are challenges, there are opportunities. So do look out for those as well. Look for trade diversification. Look after your customers, and look to see if you can find new ones.
Fantastic, and perfect way to close today's conversation. Thank you, Fergus. Thank you, Bolaji, for imparting so much wisdom, knowledge, and insight over the past hour. We've heard some great information, some real-world kind of implications of trade tariffs, the power of preferential treatment agreements, and how businesses, especially SMEs, can make smarter, more strategic export decisions. You've taken us through, I guess, the fundamentals and nuances of whether it's tariffs, trade agreements, emerging trade policies, and how political shifts and economic alliances are reshaping the global trade landscape. So I guess to quickly summarize, for those who've been with us all today, I guess it's about understanding before you export, also how to leverage trade agreements strategically, and also how to use information, tools, insight, data, and organizations such as the Institute to support you with that journey. And also working with the organizations such as ourselves, not to forget, ETK Group, who can support you. So if you're wondering how to apply today's insight into your own business, that's where we can come in and support. We offer not just advice, we also offer actionable tools and expert support to help you navigate international trade with confidence and clarity. So after today, we'll also follow up with some details via email. And if there's any questions that we haven't quite answered today, we'll also be sharing that with you, getting in touch via our experts to offer some kind of follow-up. So keep an eye out for any post-webinar emails. Also, we'll send out some questionnaires and surveys, so feel free to give us your honest feedback and insights into how you found today's session. And that's it for us today. It's been a great session. We'll be following up with some more webinars and sessions in the near future. And yeah, thank you for joining us today. I'm not sure if you have any final words, Bolaji or Fergus, before we leave today.
Just to say thank you to ETK for inviting me to join this, and thank you to everyone who's been with us this afternoon.
Fantastic.
Same here. I just want to say thank you to everyone who's attended or watched on live stream or wherever. Thank you so much.
Fantastic. Thank you, everyone. Thank you, Fergus. Thank you, Bolaji. Thank you, everyone who's attended and been with us for the last hour. And we will see you soon and see you at the next webinar. Fantastic.
Thank you. Thank you, Fergus.